This is Broke Money Hustle. And now, here's Broke Money Hustle with Trico and Erik.
All right, that was our official introduction for this new venture in podcasting. My name is Erik, and I am joined by my co-host TJ Trico, and we are here to talk to you a little bit about our journey into trying to stop doing poor things, and we'll get into our background a little bit, but really we're trying to reverse family history. We both come from blue collar backgrounds. Always living paycheck to paycheck, and so exactly. It's all about the hustle. This is Broke Money Hustle, and that includes being broke, having some money once in a while, and keeping the hustle going. We've got various little businesses and side hustles that we do, so we'll give you a little bit of information as we go along the way, learning as we go along the way about what to do with money. How do you make it grow? We're not dealing with big numbers here. We're dealing with what we can afford and how we can make that grow for long-term success. So, and as I said, here is Trico, TJ. Go ahead and introduce yourself right quick.
I'm TJ, kind of have a similar background to Erik. I kind of came from a, blue collar kind of poor family, basically grew up poor, and I didn't like it. I didn't take well to being poor. So,
yeah, no kidding.
As you can tell, I like to eat, and it's hard to eat a lot when you're poor. So, I went to school and everything, and tried to do anything I could to get a better job, and then eventually found out, like, hey, if I want to really be in a good position financially, I need different streams of revenue. So I got the day job, I got the stocks that we're going to be talking about, where I'm trying to make a little something extra, to put in my pocket. And both of us have some side businesses that we do. So just kind of working on that kind of stuff, different side hustles, so that if anything happens with one revenue stream, we'll still be all right. Plus, we got some extra money coming in. That's always a good thing to have.
Yeah, absolutely. And I can definitely commiserate growing up poor with you. You never want to go back to the days of using ketchup to make spaghetti sauce.
Exactly.
Or my garlic bread was always just white bread with garlic salt on it. Those were the days. But in all honesty, you can speak to your experience, but in my experience, we were there because we made poor decisions. And I'm speaking specifically not just bad decisions, but typical poor people decisions. And I don't use this term lightly. I'm not trying to ostracize anybody who considers themselves poor. I think poor is more of a mindset than a reality.
Exactly.
Broke means you have no money. Or broke means you can't afford things. Poor means you kind of put yourself in this position where you don't see any way out. And that's what this show is about. I don't care if you've got $1 or $2 extra. You can make the choice to not spend that on a lottery ticket and put it into something that's actually going to help your financial system, your financial livelihood better with that $1 than something like buying a lottery ticket, which is something that poor people do. That's something that we did. We're like, I can't imagine how many times your family like, oh, if we could just win the Powerball, and you go spend $20 or $30 on Powerball tickets, when that $20 or $30 could have bought a share of Dell back then, which would be worth 4 or 5 times what you'd pay for it.
Exactly.
And you'd be able to cash that out and go buy 100 lottery tickets. I don't know, but so what were some of the things like you had like that growing up? What are some poor decisions that your family made?
Oh, a lot of it was buying stuff. I don't know if it was something like insecurity with a lot of my family members, but they tend to buy a lot of things not even necessarily to make it look like they're wealthy. Just they felt better, like, well, they may not have a lot of money, but look at all these things they have, so they didn't really put anything in the bank. They didn't put anything away for retirement because they were always buying something to kind of feel like, oh, well, I don't have a lot of money, but look at all this cool stuff I have, which it took me a while to kind of break myself of that habit too, especially now with the internet. You can order a lot of cool stuff.
Oh yeah, Amazon is just a click away.
Exactly. You didn't even have to go and look for cool stuff. They'll just bring it to you, so I kind of broke my habit of that. Now the only thing I really collect now is stocks, and so and it's nice. I don't have to worry about if the house floods, my stocks getting ruined.
Right.
I got to worry about the market ruining them, but yeah.
The thing about the market ruining them, though, is we're all kind of on the same boat. So as much as we're going to be trashing the idea of central banking on this show from time to time, the central bankers are going to make decisions that are going to keep themselves wealthy. So even working with the small amounts of money that we have, if we can train ourselves to make those kinds of decisions, then we're going to have a much better chance of keeping our head above water than, say, our neighbor who might be still stuck in the habit of needing to feel better about themselves, so they go buy a new TV when their TV worked perfectly fine beforehand. And it is those types of mistakes, like we, in my brief history, my family background, we grew up on a farm. We had a family farm that my grandfather purchased with his GI Bill out of World War II. 300-acre cattle farm. We had hogs for a little while. We grew some corn at one point, mostly wheat, mostly cattle. And that was a functioning, surviving business, a thriving business. I was never for want growing up on the farm. We had plenty of food. But when we sold the farm, we were free and clear on 2 houses, cars. We could have been living the good life if we had just lived within our means. But unfortunately, decisions were made to improve the house with a line of credit, so a second mortgage. Probably we didn't have a mortgage, but we got a mortgage to make improvements. Then a second mortgage to add other things like a water softener. Somebody came and sold us that we didn't need. And there was just lots of little things like that. And pretty soon, because you're not aware of the massive amounts of debt and compounding interest, you just get your head above water, below water, and you're just struggling. So, I find myself now looking at the amount of unsecured credit card debt that I have, the things that I'm surrounding myself with, and wondering how can I make these changes better. And I really decided last year by opening an Acorns account. And we're going to be pushing Acorns and Robinhood pretty strongly on this podcast too, which hopefully you're listening on Spotify. We're happy to be on the Spotify network, and we are on the IndieVolt network. So if you're listening to us on the IndieVolt radio channel, thank you for tuning in and listening to two broke-ass guys talk about how they're trying to not be that way.
And thanks to Varian for letting us on the IndieVolt network. I think we're the only non-comic book podcast on there. Right.
But you know what? We're going to touch on comics here and there because it is an asset. They do appreciate and value collectability-wise, so that would be something we can have in a later discussion. And I know a few people in the comic book industry would like to have on as guests to talk about how they're investing their money. Small business, entrepreneurship, those things kind of roll into it. I'm an artist. I do comic book art, and that's kind of how I earn the money that I have coming in. Thankfully, my wife is a full-time employee for a really big company, and she works in a cubicle that she hates, but that brings in a good income for us and she has a good retirement account through Fidelity and
nice.
Little things like that. So she's definitely the breadwinner of the family, but I'm trying to become the one who manages our money better, because we didn't always do that. We were still living hand to mouth until pretty recently, and now we're being able to sock money away. And the Acorns account really helped big time. Now, TJ, you're in Acorns too, aren't you?
Right now I'm just doing Robinhood.
Oh, you're just doing Robinhood? Okay.
Yeah, kind of feeling around in there. I have a Fidelity account for stocks, but the website seems so not user friendly. Like every time I go to do anything on there, and I mean, not a boomer, but I am kind of, like not as technically involved as I should be. So maybe it's just me. Maybe it is really user friendly, and I'm just kind of a Luddite and can't figure out technology. But
I think you have a point there, because I'm looking to close out my TD Ameritrade account, which I started a long time ago when it was still Scottrade before it got bought out. Because I've always had this idea of wanting to own stock, wanting to invest, and I never had the capital to do it, and I also never had the guts to do it, because it was kind of you are taking a risk. But once you educate yourself and realize that by putting your money in a savings account for like Chase or Wells Fargo, you're taking a risk there too. So it's a risk either way. So you might as well weigh the options of the reward part of the risk and see which is better for you. Like, for example, with our Chase savings, our interest rate is like 0.01%. Okay, that's effectively zero.
Yeah.
I'm not gonna try to carry a balance of like $3,000 so I can have 3 cents in December added to it. I don't know what kind of rate you're getting at your bank, TJ, but I mean
it's pretty small. Yeah.
And that's how the banks are robbing poor people. We get this idea that we can put our money in the bank and then we can go get it if we need it, but it may not be there. Banks no longer have to carry any cash to make loans anymore for any balance. And that's a recent change that most people may not be aware of. So it would be a good idea, and I'm not saying let's create a run on the banks or anything, but if you have a little bit of cash in savings, try to keep that liquid as possible so that in an emergency, you've got at least $100 to go buy food with at all times. So anyway, you're in Robinhood. I'm in Acorns, and I'm in Robinhood. I also have a Folio First account, which is where my Square stock is. That was a little strange. That was the first stock that I really bought, was Square, and that's something I use in my business, which they always say: buy what you know, buy what you use, buy what you're familiar with. And as we'll tell you here in a little bit later on, we've certainly got a share of things of being burned by buying something we're not familiar with.
And that's just the last week.
This last week has been crazy. But I did buy Square on its IPO, which is when a company goes public. They have an initial public offering, which is what IPO stands for, which is their first salvo into allowing the public to buy shares of the company. And because I was a Square user, the user base got the IPO before anybody else through a specific platform that got bought out by Folio First. But that platform no longer exists. I think it was like Level Up or something like that. But that's where the IPO was first released to Square holders. And I bought it for $11 a share. That was its initial bid. And I put $100 into it. I wish I would have put 1,000 because it's been flirting with 90, 95. I think Square is going to go to $100 a share before the year's out, because once convention season starts again and retailers start using, because more and more you're going into even traditional brick and mortar stores and they have Square instead of the bank terminal anymore. And it's really affordable, really simple. And I think once we had really good job numbers come out, the economy looks like it might actually get that V-shaped recovery that Trump talked about. Exactly. And that's going to cause consumer confidence to go through the roof, and that's going to cause more spending. And I think Square should be able to get over that $100 a share, which if I'd have risked the 1,000, and this is the same mentality as when I was considering by using some extra student loan money I had, which is another poor person mistake, borrowing more than you need. I was considering buying some stock with it, and I was too hesitant because, oh my gosh, Netflix is $74 a share. That's expensive. But imagine if I'd have put $1,000, bought $1,000 worth of $74 Netflix stock, which is at $450 right now.
If you would have done that, we would have had to change the name of the show to Rich Money Hustle.
Yeah, no kidding. Or if I remember when Amazon came out, and it was just amazing that you could get any book delivered to you.
Yeah.
And when that IPO launched, it was $19 a share,
Oh,
and now
man.
it's $2,500.
Yeah.
Just imagine all of those nights out when you spent $50 on pizza and beer, and then you could have bought $50 worth of Amazon stock. You'd be you'd be in a different
Oh,
spot now.
oh, exactly. That's part of the mindset too. Is yeah, I look at things different. You know, like instead of like you were saying, instead of ordering pizza and spending $20 or going out to eat and spending $50, I'm like, well, I could, you know, buy some stock with that, make some money off of it, and then just make, you know, make a meal at home, get all the family involved. We're all making the meal together. We're saving money, and then I'm buying some stock to kind of put towards the future.
Yeah. And do you do anything besides stock as far as investing?
Nothing too much. I have a 401k. I put 12% into that from my day job. It's really boring because I'm super conservative with it. So there's like nothing risky going on, and it so it doesn't really have highs and lows or anything fun. With my Robinhood, I put 25 a week into there, so it's not anything crazy, you know.
Mm-hmm.
And with there, I try to balance it out where I have some stuff I know is going to grow and pay out some dividends and everything, and then I try to do some of the growth stocks where I'm like, I'll buy some of these low, I'll sell them when they get high and everything, and then usually I forget to sell them when they get high, so then they drop back down below what I paid for them. But
you really got to watch these things too, and I think that's why
Yeah.
people get sucked into day trading. They get the idea of just like watching it like a hawk and trying to get that peak price, and
Exactly.
that'll really change your lifestyle. Now we're dropping a lot of words like dividend. I just defined IPO. We're gonna try to anytime there is marketing lingo. Like that, we're going to try to define these terms to make it easier for anyone listening to understand. Because really, I've been trying to get a really good, solid financial education. I've been doing it for free on YouTube. There's lots of people that will probably be recommending that we've watched or listened to. Lots of websites that we've gone to try to educate ourselves. Investopedia, MarketWatch, just to name a couple. But there's a lot of terminology. There's a lot of lingo that we really get hung up on that you really have to put the extra effort into to learn what that means, and then I'll backtrack it and how it applies to you. So we want to try to use this channel to demystify that for you, to make it easy for you to do some investing, to make it easy for you to actually save money so that if things get bad again, not saying they will, but there's no guarantees in life. We could have another market crash. We could have a currency crash where our dollar is effectively worth nothing. And we need to prepare for this, just as you would buy emergency food and extra shotgun shells in case of total anarchy, which we've kind of seen some of that in the streets here lately. You need to be able to protect yourself. And just as you would protect your physical body, you need to protect your financial future as well, so that you're the one who maybe is handing out the bread in the bread line, not standing in the bread line.
Exactly.
And that's really what it is. This is a blue collar thing. We're not highbrow. We're not trying to tout our wealth. We have basically no wealth by any stretch of the definition of the means, but we're trying to take what we do have and grow it. And
Exactly.
so you've got your 401k, you've got Robinhood. I'm on a few more platforms. I'm on Acorns. And when I started with Acorns, I really like the idea of Acorns, and I really encourage you, TJ, to try Acorns out, because Acorns is one of those platforms where you can set it and forget it. And if you're someone who doesn't want to get into the confusion of looking at charts or looking up individual stocks to buy, learning about companies and things of that nature, you just want to try to grow your money at a higher rate than the bank will give you, I highly recommend something like Acorns. Now, the way Acorns works is that you sign up for a small monthly deduction. So this is dollar cost averaging, where, like for me, it's $10. So every month, Acorns puts $10 into an account that is backed by a set of funds. I don't know the individual stocks. I'm sure it's some sort of like giant money market that they have for themselves, like a mutual fund. But they have different categories where you can be conservative, semi-conservative, semi-aggressive. And when we say conservative, we're talking about safety. So the least risk in investing is conservative, whereas aggressive is the most risk. And then Acorns has that scalability. So $10 a month, and it goes in an account and it grows. And then you also have what are the roundups. Roundups, I was first skeptical about because you never know what it means. Basically, anytime you buy gas, buy groceries, anytime we use our debit or credit cards that are linked up, it rounds it up to the nearest whole dollar and takes that roundup and sticks it into this account. And then once those have reached $5 worth, which happens really quickly with our spending habits, that goes into the account. Now that account started at pretty much just $10 a month and roundups effectively zero when I started it. We've been going, actually, I think it's been a little bit longer. It might be almost 2 years that we've been going with it, but we're almost to $2,000 saved in that account. And it's growing much faster than I had hoped. I was hoping that it would grow at a rate to where we'd be at $3,000 by the year 2023, because the whole purpose of the account originally was to help pay for a trip for my wife and I to go to Japan. Our 20th wedding anniversary is 2023. We needed a way to set money aside for this trip, and $3,000 alone, that's just going to pay for our plane tickets. At today's prices, that pays for the plane tickets. And we still have other expenses like her passport, money to spend over there, transportation while we're there, buying the rail pass, which is expensive, but we can take the bullet train all day long, things of that nature. And it looks like the way that this is tracking, we'll barely be able to pay for our whole trip just with the Acorns account. And we've never missed the roundups. You pay for a Netflix membership, you pay for a gym membership that takes $10 out of your account every month. Pay for Acorns to do it because it grows. And like I said, you can scale that. So if you want to be ultra safe, you can be super conservative, and it's mostly in bonds and high yield blue chip stocks and things that are a safe bet. Mine right now is set to aggressive, and it's been growing really, really well. But I'd rather earn 13% than 0.01%, wouldn't you?
Exactly. Yeah. So with Acorns, because I've been looking at it, because I really dig the roundup thing, because I use cards pretty much everywhere. I never use cash hardly. But you can hook up your credit card, like multiple credit cards and debit cards to that.
Yep.
Nice.
Yep. Every credit card and every debit card we have is hooked up to it. So every time we pay a bill, we're putting money aside for our future. Every time we buy groceries, we're putting some money aside for our future. And that is a really good pivot point for changing your habits. And one of the biggest poor person things is poor people pay themselves last, rich people pay themselves first. And that is one of those dichotomies that you have got to change if you want to get out of the hole that you're in, if you want to stop living paycheck to paycheck and put away some money for a retirement or a trip, or it's anything really. If you just want to have more freedom with your hard-earned labor, because really that's what money is. Money is an exchange for our labor. So the time that we spend doing things is what's generating our income. And you can do that one of two ways. You can work for someone or you can work for yourself. You can do both. I know. But a third way is to just let the money you already have work for you. And that's what investment does. Now, I'm also in crypto, and I buy gold and silver. Again, not very much because gold's pretty high right now, but I am buying a lot of silver. And I see gold and silver as my own personal bank account, my own bank. It's liquid. I can take it anywhere and sell it for its market value and get whatever currency I need out of it. So, but it's a good store of wealth. It doesn't carry the risks that investing in the stock market does, but it's certainly, I know I can go to my safe and pull out my silver and turn it into whatever currency. That guarantee's not with the bank. If the bank doesn't have to carry cash, keep cash in its vault. If the cash isn't there, I'm I'm at the mercy of whoever is providing social services at that point, and I want to be able to provide my own social services. So I'm not buying gold and silver as an investment as much as I'm buying it as a store of wealth.
Exactly. Especially, aren't the banks now, they don't have to keep any reserve, like, at all?
Right.
So, yeah. So it's
So
it's really good.
it's essentially all they need is thin air, and they're
Yeah.
okay from the Fed, and they can do whatever the hell they want. That's not a sustainable model.
No.
That's not going to happen long term. Okay. So how much money did you make this week, Trike?
Oh, well, I
Or at least in percentages. Was it a good week? Was it a volatile week? I know we both have a stock we're going to talk about here shortly, but
yeah, I mean, I didn't break even. I think I'm down overall compared to everything that I have in my Robinhood. The 401k I never bother looking at.
right.
But the Robinhood, I'm down maybe 1% of what I have invested in there, if I'm doing my math right. And part of it too was Friday I was down closer to 10%. So I took some extra money, bought some more stocks that I knew would at least break even, if not make a little something on Friday. So
Right.
so that kind of helped me out to where I got closer to breaking even. Let's see, Friday I picked up Ford stock. It's something I've been wanting to get for a while. It was around 50. I think it was like 49 and some change. So I've been wanting to get that. Or I'm sorry, no, Ford was around $7. And I bought a share of Coca-Cola that was around $49. You know, those two I have faith in. They've been around forever. I use both those companies. So, and then I bought some stuff where, you know, you get a hot tip and you buy some stuff. So I I bought some of those, and then immediately the stock went down, but I didn't lose horribly on it, you know, because I bought them Friday afternoon, so this market didn't really have a whole lot of time to drop. And
well, let's talk about one of those buys, because I bought it too. I've already sold it. Are you holding it still?
yeah, I'm a sucker. Usually, like I hate losing money, so I'll hold on to it until I can get back to where I at least break even or make a little something on it. You have it up on screen. Yeah,
Yep.
yeah, Genius Brand.
So
man.
Genius Brands is in the business of licensing kids cartoon like clothing and bric-a-brac. They are this was a very volatile stock. This was one I was looking at. It was like I was looking at it last week because, you know, when you don't have a lot of money, you tend to not look at stocks that are north of $100 a share or even north of $50 a share, because you can't buy very much of that company. But stocks that are just a few dollars a share, and they're out there and they're worth money, they're worth buying. I was courting this one, and I was looking at it, and I think I was looking at it about it was sometime last week, so it was still hovering around $3.80 a share. And then so I put it on my watch list. So in Robinhood, you can put a list of anything you want. So I have a list of things that I want to research and possibly buy. And I had Genius in there, and I watched it for a couple of days. It had a little bit of uptick, so it seemed like it might be a pretty good, like, safe bet to pick up $100 worth of shares, and you make a greater return with a greater investment. But looking at the screen here, you can see the chart, and I'm not too great with Market Watch. I wish I could. Let me try to zoom this in a little bit more. Maybe I can just do. Yeah, I'll zoom in like this.
I wish they did it in like an emoji where it's like happy face, crying happy face.
Yeah.
Just crying sad face. Like,
that's one of the things that attracted both of us to Robinhood, is because the interface is so clean and easy to read and user friendly. Anybody can understand it. And the reason, I don't like TD Ameritrade because it's confusing to read, It's like,
Yeah.
I need to have a degree just to read an interface. No, it doesn't need to be that way. And Acorns is that way too. It's really simple and operate. You can just do both of them via the phone. But so now you and your wife both bought stock in this company. I
Yeah,
bought
yeah,
this.
she's
I bought it at $9 a share.
oh man.
I put $50 into this thing at $9 a share. And where did you guys get in on the train?
Well, my wife, she's smart. She I think she got in around like $4 a share because
Okay.
she's been doing day trading. She's furloughed from work, so she'll just kind of watch the market all day and do some day trading. And she's doing all right. She's making some all right scratch on it, And so she was telling me about it, $4. And I'm like, yeah, whatever, what does she know, And then, as husbands do,
Yeah, exactly.
And so then it got up to around, I bought in at 783,
Okay.
and I'm like, it's going up. I'm like, all right, and then I'm
That was
still
about
working.
June 3rd.
Yeah, yeah, exactly. So I'm like, all right, so then I'm working and everything. I work from home, so I'm on the computer, I'm working, I'm not paying attention to the stock. And then I think you messaged me like, hey, did you look at your Genius stock? And I'm like, oh, did it go up again? All right, cool. So I logged in, and it was like $2 less than what I paid for it. And I'm like, what? And then after that, it was just a nightmare, like a horror movie where you're being chased by a killer, but
Yeah.
the killer is just, Genius stock
But,
shares
but,
chasing me.
but before the killer comes out and starts to stab you to death, you get this glimmer of hope, because this thing went to the moon, basically.
Yeah.
For almost no reason whatsoever. It went to the moon. $11.42 was its high.
Yeah,
and you
that's
think,
when my wife got out.
Yeah,
That's
yeah,
when she got out, because she made money off it.
Bravo.
Yeah.
Because then it craters.
Yeah.
And when you're looking at these charts, that's what we're talking about here. The peaks, for those of you who's not watching us on screen, we have Market Watch up. We're looking at the Genius stock, and Genius is what is it called? The little 3-letter thing. What's that called?
GNUS.
Okay, yeah, that's its ticker symbol, right? Yeah, stock symbol, ticker symbol. Yeah, so GNUS, if you want to look it up, if you're listening on the podcast, or on Spotify or on Indie Volt Radio. And we're looking at its chart, and you can see these peaks and valleys that look like mountains and literal valleys. And so you can see when this thing hit $11.42, 1090, and then it's just like this complete downhill roller coaster ride to $4.73. Now, remember in the story, I was like, man, I need to get on this ride because it's going up. So I bought in at $9 a share, put $50 in, and it cratered out on me at 740. I kept it for another day, and really it's like, what's the least amount of money I can lose on this thing? And so I sold it at about 650. I was about here when it sold, and as you can see, it's pretty much found. I think it's found its normal price. It's probably going to hover around this $6 range now for a long time. It's kind of figured itself out. So yeah, that was definitely a mistake, but with the case of your wife, not a mistake.
Yeah. She, she watched it and everything. She saw it get up there, and then I think right before it, like right after the peak, when it went down a couple pennies or something after that, I think she pulled out, and because she made all right. I think she doesn't do a ton of money in there. She's furloughed, so she doesn't throw thousands in because she's essentially not working right now. But she made like $60 off that stock that day, so it wasn't. It wasn't too bad.
No, that's a pretty good payday. Most people will, a lot of people out there will work a day job to make that, at like a Wendy's or something. I'd rather sit at home and make that than flip burgers for it. No, nothing wrong against flipping burgers. I love a good hard day's work, but I
love to eat burgers.
Yeah, you get a point to your life where you want to grow past that, and make more than $7-8 an hour, or even $12 an hour doing that. You want to make $24 an hour, or just making your money grow for you. Now we're giving out a lot of advice, but neither Trico or I are financial. What would the job title be? We're not investment advisors. We're not professional consultants. So please,
we're not finance experts or
don't
stockbrokers.
make any stock decisions. Don't make any decisions with your money based on what we say. We're just sharing our life experience in trying to do rich people things, because that's how you keep some of your money, is to do those things. There's a reason why they do the things that they do, and it's not because they're greedy necessarily. They're just smart. They take advantage of things that are available to them, and a lot of those things are available to us. We just work with smaller numbers.
Exactly.
But so how long are you going to hold on to Genius Brands here?
I hate losing money on anything. I think you're right. It kind of flattened out to where I'll probably never get back what I paid for it. But I don't know. It's There was a little bit of news that came out with this, and I'll share. Where was it here? Yeah, weren't they? They were going to be like a free streaming service for kids or something. Was what they were saying.
They've got some of those things in the works. Now I don't know who this Hindenburg is, but they're saying so. Genius Brands, Nasdaq GNUS, more than tripled in the past week, only to plummet by 27% in the first few minutes of trading Friday. Hindenburg research questions the valuation. So I guess there's like a business research firm of some sort. Mm-hmm. Questions the valuation and its business prospects. Hindenburg is short the stock. So when you short something, you're betting it's a loser. Is that correct?
Yeah.
Okay.
As far as I'm aware of it, yeah.
Okay. And these are again types of terms that we're going to do our best to try to define these better for you. So when you're shorting a stock, you're basically taking the risk that you think it's going to underperform. So you want to be able to sell it at a certain, that this is options trading where you can either short a stock, or you can, what's the opposite of shorting, off the top of your head?
It's not inflate. It's something like that though. I forget the term.
It's okay. It's just adding to our blue collar credibility here.
Yeah, no, I'm trying not to look up the actual term because I don't want to be like, oh, let me look that up.
But essentially, you're when you're doing options, you're buying the right to either purchase, or you're buying the right. First of all, it is a purchase. You're buying the right to either sell or purchase the stock. So the option is the right. It's the option to do something with the stock. So you're either buying the right to purchase it or sell it at a certain price, so that you make money regardless if it's a tanker or if it's a success. That's kind of the gist of it. Mm-hmm. So this research group is saying the stock should fall to $1.50 in a month. So I think we're going to take a look at this stock again in another month and see if it met this prediction. That might be that might be a little extreme.
Yeah, if our audience tunes in on Facebook a month from now and I'm crying at the beginning of the show, then we know what happened with that stock.
so you're going to be in this for the long term and see where it goes. Is that what you're saying?
I don't know if it. I don't know if I see it falling down to what they predict, $1.50 or something.
Well, yeah, then, and within a month, $1.50. And they're buying a bunch of stock and they're shorting it. Is what they're doing. So they're a short seller. They're expecting, pointing to the company's management view, that the shares are worth 35 cents to $1.20, given recent financings. And there's currently trading. It would mean that it's priced at 1,201 times its annual revenue. I'm not sure exactly what that means, but it doesn't sound good at face value. When your annual revenue is low enough to where your stock price is that inflated.
Yeah.
And there's no indication that the company's show has been renewed for another season. So they have a show on Nick Jr., and that it airs less frequently now. So yeah, they're like children's licensing company. They've got a kids show on Nick Jr. and then they make money off of licensing out their properties and stuff. So it doesn't sound good for Genius Brands long term, at least the way that this short selling place is calling it. But it'll be interesting to see. I mean, regardless if you own it at all, we're going to look at the stock in a month and see if this prediction holds true.
Yeah, I'll check it out. I mean, if they were to develop another kids show and it did well on Nick Jr. or Nickelodeon, then it might bounce back. So I might try and hold on to it, because especially with children's programming, it's based a lot on fads and everything. Some will be really hot and they'll have a ton of toys out for 6 months or like the Christmas or holiday season, and then the show kind of disappears after that. So maybe I'll hold on to it and just kind of hedge my bet that they'll come out with the next big hit show on Nickelodeon.
Yeah, I think what we saw here in this past week was mostly there's two things that drive market prices, and if I'm incorrect, please correct me in the comments, or TJ, if you want to correct me if I'm incorrect. But there's really only two drivers to it, and it's the economy, and then you've got speculation, central banks, the Fed. Those are right now the market is largely being pumped up by the Fed. I think yesterday when we had those job numbers come out, we're going to start seeing the market being pumped up by the economy. But it was for the longest time since at least March being pumped up by the Fed. And I think this is a case of speculators seeing a bargain stock and jumping on it, thinking that it was gonna moon, and it did moon. So I think a lot of those people probably got out when your wife got out and did make a good amount of money.
Yeah, I think so. Everyone else I talked to about like Genius and some of the other growth stocks they're pretty happy, but a lot of people are furloughed and at home right now, so they're able to kind of watch the stocks a lot better. So I think a lot of people are becoming kind of like experts really rapidly just from working with stocks and like Robinhood and everything every day.
Yeah, and the only other stock I want to talk about, at least today, is definitely a buy for me even more. Yeah. I already own it. You said you recently just bought it, and that's Ford.
Yeah, it was, how we were saying, like, don't kind of take our advice on stuff, do your own, like if we mention something or recommend something, do your own research before you invest, all that kind of stuff. This was one of those things where it was around $4 or $5, I think you were telling me to buy some shares of it, and I'm like, I don't know, because I was looking at the chart over the last, year or two or something, and I'm like, they haven't really gone up or down. They just kind of been around the same level. So I didn't buy it right away. And then I should have listened to you, because now I could have made, a couple bucks a share on it, and offset my Genius fiasco. Yeah.
Ford was one of the first purchases I made with Robinhood. And I got into Robinhood in March, just after the big crash happened. And I got in at Ford at just around $5 a share. And yeah, it's pretty much kind of gone. Actually, I think it was more like April. Yeah, it was. So this was probably where I bought it, was around April. So probably April 7th, April 8th, somewhere around in there. And if you look at the chart, again, we've got Ford Motor Company up on Market Watch. It's stock symbol F. For those of you listening on Spotify or Indie Volt Radio, you can look up the ticker symbol and look at that. And we're looking at the charting of it, and basically kind of staying around the $4 or $5 range. And then as businesses start to open again, we're starting to see, and it flirted with $6 off and on for a few days last week, finally hitting over $6 on the 28th briefly at $6.03. And currently we are at $7.33 a share. Ford is one of those blue chips. This company's not going away. They're not going to shutter their business. This is one of those buy it and hold it. And when it goes down, like if it goes down again, I'm buying more.
Buy a lot of it.
Yeah. And get in on the ride, because this is going to perform. If you just put money in this one stock, it's already going to perform better than a savings account at the bank. So if you're looking for long-term growth, something like this, again, do your own research. We are not professional investors by any stretch of the means. Please do your own research. Consult if you'd like. But hopefully we're helping to demystify some of this for you, so that if you do decide to go to someone to handle investments for you, you're not completely ignorant on what they're talking about and how they're advising you. And try it for yourself. Try it with just a few dollars and see if you like it. Again, Robinhood is a very accessible platform. You'll see links on the when this is posted to YouTube. We're going to post links in the description. We'll also post links on our Facebook page to where you can go and sign up with Acorns and sign up with Robinhood. And if you sign up with Robinhood, you will get a free stock to start out with. Mine was Plug, which was totally free. And it's basically, it was a $4 stock, and it's around $4.50, $5, I think right now. But it works like a little scratch off ticket. You get like 3 little icons to pick from. It's kind of a little fun game, and whatever you pick, you might end up with something like Ford. You might end up with Apple stock. It's any stock in their portfolio that they have access to. You can win 1 share from it. And then with Acorns, for everybody you refer, you'll get $5 back into your account. And another thing, I'm on the Acorns platform that I really want to stress, and another good reason for TJ to join up. If you shop through the app, many companies will give you back a percentage or an actual monetary value into your account. Nice. So, for example, my wife and I love cats. We have 2 cats. We're cat owners. We treat them very, very well, and we buy from a company called Pretty Litter. It's a private company. At least I've never seen it on the stock market. If they ever become a public company, I will buy the cat crap out of this company. Because, again, it's a product I use. It's something I really love. And I love cats, and I hate the smell of ammonia from their litter box. And this stuff is a miracle. It basically traps moisture. They're not a paid advertiser, but if they'd like to be, I mean, I would advertise the crap out of them too, because it really does what it claims to do. The crystals trap the moisture, traps the ammonia scent. You do not smell the cat box. You just have to stir it every day, and you only remove the solid waste. And in a month, you change it out. So we're on a monthly plan. We get a new box every month for this stuff. And every month, Pretty Litter gives us $2 back. It goes right into our Acorns account, because we purchase and subscribe. And they are a company that is partnered with Acorns to give what they call found money benefit. And there's certain things like if you shop on Groupon, which is a stock I'm looking at purchasing. It's $1 stock right now. It's like $1.30, $1.50. But you can launch Groupon through the app of Acorns and get that extra little 2%, 5%, whatever they're giving you. So it's just another way that your money will work for you through something like Acorns. We're trying to keep these episodes about 45 minutes to an hour. This is our debut episode, so thank you all for checking out. We have a comment from our buddy V.
Oh yeah.
You guys ain't covered me Wiz stock yet, have y'all? You know what? We're gonna have you on. Probably we'll try to have you on maybe the Monday show, and we'll talk about WIZ, and you can give us your experience on what that's like. And that's another thing too, is we're going to have guests on the show. I'm going to try, both TJ and I, we're going to try to get financial guests who can explain things better than we can. But we really want to focus on other people in our situation, other blue collar people, hardworking stiffs who are trying to do this, to share. If you'd like to be a guest on the show, share your experience. We'd love to have you. You can send us a message via our Facebook page, Broke Money Hustle. You can chat us up in the comments, or you can send an email to info@brokemoneyhustle.com if you've got a comment or question or anything like that. And then, speaking of questions, I want to get to, we had one on the Facebook page, and give me a second to bring that up. Are there any stocks that you're looking at for this upcoming week, TJ?
Yeah, last night I was messing around and I found some like penny stocks, because I get a kick out of a penny stock. Like there's one when I was looking up Ford. There's one where their symbol is FORD. So, and it was like $1.08 or something when I bought it. So I'm like, heck, I'll buy it. And I haven't made crazy money on it. It's up 16 cents from what I bought it, But there was a couple of them over the weekend that I saw. They were like crazy cheap, like around a dollar and some change. One of them was like 16 cents. Yeah, Synergy. That one, it's like 16 cents. I put in a request to buy a share, but the market was already closed, so I won't actually have any shares until Monday when the market opens. And then Top Ships, that was like 22 cents a share. So I'm like, heck, I can find that like looking in the folds of my couch. So I'm like, I might as well buy a share of it. Can't hurt. And Oasis Petroleum was like $1.25. So I bought a share of that, just to kind of diversify. And the shares there's such a low amount to where it's not going to make or break anything, So I bought some of those. I'm kind of interested to see how they do on Monday when it opens. Given my track record, it'll probably drop to half of what I paid for it, but yeah. But it'll be interesting. Sometimes I just because to me, I like making money. So if I'm making 16 cents off a dollar share, or I'm making the $10 off of like $100 share, to me it's just the thrill of kind of making some money that I didn't have to go and work like an hour at a job for. I'm just kind of get some passive income. Yeah. And with the guests we bring on too, they don't have to only use the platforms we use. If they're using a different platform, they can kind of come in, because I'm always interested in learning other platforms and everything. Maybe if someone does a lot with Fidelity, they can come on, kind of show me how to use mine. And so it'd be pretty cool. And some other side hustles too. Maybe if stocks isn't their thing and they have something else. If they invest in gold and silver, I'd like to hear more people talk about that and everything too. So anyone that does that can come on. Pretty much any kind of broke money hustle that they're doing, I'd be interested in hearing about.
Absolutely. If you're a Lyft driver, if you work with Shipped, these are all different side hustles that are out there, and we've had a little exposure to them. So we'd love to hear from you guys as well. If you do that kind of stuff, what kind of success you're having, and just keep the income streams flowing. This was we posted this to the Facebook page, and I think the Instagram as well. And there was a comment from Instagram, but I can't bring it up on screen for right now because I'm trying to be timely. But the Audacity of Style asks, how long do you have to hold a stock to receive dividends? In my research here on Investopedia, and again, I got this on my phone, so should be able to start sharing my phone here before too long, but right now I'm not able to. I found 2 articles on Investopedia that I read, and basically it says you just have to own the stock when they're giving out the dividend. If you own it, you get the dividend. And there's something that people try to do where they buy the stock just before the dividend's going to be released. And on surface, you might think that's a good idea. And again, a dividend is the company paying the stockholders money, actual money, for buying into their company for their support. So it's a reward for supporting the company. Because when you buy stock, you are supporting a company. The company uses the money you pay for that share of the company to invest in itself, to hire people, to build equipment, to create new products. That's where the capital comes from. Either comes from public investment, which is what stocks are, or it comes from private equity, private investment, which means you own the whole thing and it's all your skin in the game only. So if you really love something, like if you're passionate about Gucci jeans or Coca-Cola or Dunkin' Donuts, own a piece of the company. Instead of buying the extra large Frappuccino, buy a share of Starbucks. What you spend in coffee in a month, you could buy 1 share of Starbucks, and then that'll give you a return in the future. But back to this whole idea of a dividend, so we can wrap things up here. It's a kind of an unscrupulous practice, Investopedia says, and basically it's kind of a losing strategy because if you do that and try to short, like sell it after you get the dividend, stock prices go up and down, and usually they will go down, and you will have lost the long-term investment. The value of the stock could go down after you get the dividend before you sell it, and effectively canceling out the fact that you made any money whatsoever.
Exactly.
So dividends reward buying and holding. So as long as you buy a stock, hold on to it and just let them pay you to hold on to that stock and let that add up. I was really excited in my Robinhood account. I checked it yesterday. I got my first dividend from Realty investments. And that's another area too, is Realty. I've got a couple of people who I'm trying to get on the show to talk about real estate investment. But this is an ETF that pays a dividend. It's O is the stock ticker. So I can bring that up real quick. I believe it's just O. For those of you who are listening on IndieVolt Radio or Spotify, you can check that out. Yeah, Realty Income Corp. I bought this at, this was one of the earlier ones that I bought, and I think I bought it about mid-April. So if I go to a month, it was in the low 50s when I bought it. So now it's trading at 60. I only have one share, and I got 24 cents on the dividend payout. But that's exciting. So it means the system works.
Exactly. And it all adds up. Like Warren Buffett, he owns a ton of Coca-Cola shares, and they usually pay around 3% dividends. So as we accumulate more and more stocks, especially the ones that pay dividends, we can eventually have that as like a passive income where we're not going out and putting in like a 9-to-5 for the money. We'll get it every quarter from different companies. And right now, because you can set it up with like a REIT where your dividends kind of get rolled over, reinvested back in. So I'm kind of doing that now, but I'm hoping one day once I get enough, I'll get a check for a dividend, and it'll take a while, but hopefully it gets up there to where even if it just pays one bill, like if it pays my internet bill or cable bill or something like that, I'll be happy, But that's part of the investing and everything, because there's some of the stocks are kind of growth where they don't pay any dividends. So you just kind of it's like buying a comic book. If you buy the first Superman comic for 10 cents and now it's worth like $1 million or something like that, like every year the Superman comic's not giving you a couple dollars, you're just kind of holding on to it until it grows. So some stocks are like that, where they're like a growth stock, and then the dividend ones are nice because every quarter, every year they'll pay out a dividend. But you can also kind of roll that over to buy more stocks. So you kind of use it's like Thanos with the Infinity Stones. He used the stones to destroy the stones. You can use that dividend to buy, or use the stock dividend to buy more stocks.
Yeah. Yeah. In fact, I think I got my Robinhood is just set up to automatically reinvest any dividends that come in, because it's going to be such small amounts of money to start out with that's really what you want to do, because then you can compound grow that and,
Exactly.
and just rebuy it. Okay, so we're pretty much at our hour, and I'd really like to thank my co-host here, TJ, for his expertise and being willing to start this little venture with me. We kind of did this in the spur of a moment. It's like, hey, wouldn't it be cool if, and because we both have a passion about this thing, and we just started talking to each other more and more about it. We met through a mutual friend, Varian, and we have this interest, and we have this similar backstory, so it just makes sense for us to take it to the next level. And and this is another entrepreneurial thing. We're gonna have like some swag and stuff at some point, I'm sure. And we'd love to get this monetized on YouTube and through Spotify and any of our other our partners with podcasting. So please subscribe. You can subscribe to this podcast on Spotify. You can listen to it on IndieVolt, and you can see the show on the IndieVolt network through your Roku device. And see what we've been talking about on screen. You can listen to it on the radio. We will be on Apple. We will be on pretty much all podcasts, wherever you get your podcast eventually. because we're going through a company called Anchor, and they do the distribution for us. And they also harness some advertising monetization stuff too. So really excited to be partnered with them, and hopefully that will that'll incur some things. So please also support the Facebook page. I got it up here on the screen. We're on Instagram too, correct? I think.
Yeah. We're on Instagram and also on Twitter. On Twitter, we're just Broke Money because they won't give us enough letters to spell the entire name. But Instagram, we're under Broke Money Hustle. And also, if you like the graphics and everything on our Facebook page, Erik does a lot of artwork. So,
yep.
Shameless plug. Yeah.
Hey, I'll take it. My art career is under @DreadedDinosaur. And I might promote that from here and there, but mostly I want to grow this as its own thing. So I don't really want to do too much of my my art business unless it's part of the show. I don't want to. This is not just another platform for me to promote myself. I want to promote investing and growing money and kind of share and focus on that. But I do appreciate the segue and do a little plug for that. Yeah. But yeah, I do comics and have a web comic on Webtoon and all that. But yeah, you can learn about that if you look up Dreaded Dinosaur on Instagram and Twitter and all that. But yeah, please follow Broke Money @BrokeMoney on Twitter. We're working on getting a website, brokemoneyhustle.com, where myself and TJ will write blogs from time to time. Mostly we'll be republishing on relevant news articles for financial information. Maybe give a little bit of commentary on them in between broadcasts. And we do plan to broadcast twice a week, live on YouTube and Facebook on Mondays and Saturdays. And then the shows will be available as podcasts through your favorite podcast provider. Do recommend Spotify, Apple Podcasts. And we'll make an announcement once we're confirmed on Apple. We're still waiting on that confirmation, but you can find us on Spotify. So subscribe to us on there right after you subscribe to Joe Rogan. And
exactly.
Maybe we'll make a splash here, because I really think we're providing something that's not there, and that's just something for blue collar people to try to get an understanding on this. And again, we're not financial advisors. We're not professionals in this. We're just sharing our experiences for pure entertainment value. Take the information as a grain of salt. Do your own homework. One of my favorite slogans in news media, The Blaze uses it all the time. Do your own homework. Learn the things for yourself so that you can control that knowledge and control your future. TJ, why don't you take us out for the day?
All right. Everyone have a good weekend, and we'll see you Monday when the market opens back up.
All right. Yeah, we're going to be talking about our picks for the week. And then Saturday, we'll be recapping whether those picks were a mistake or not. So
yeah, we'll do the how much money did TJ lose over the week recap.
Hey, you never know. It could go the other way. Looks like things are bouncing back. Anyway, so we are done. And I'm going to hit our intro again because I haven't had time to make an outro. And we will see you guys on the Monday broadcast. And in the meantime, start investing. Make your money work for you.
This is Broke Money Hustle. And now here's Broke Money Hustle with Trico and Erik.